Let's invite our next guest then, IREDA. The stock has seen a big surge post its listing, though from the top it's seen some bit of a correction. Their past quarter's numbers were good, with robust loan growth, which aided the margin expansion. To discuss more on the company's business prospects and the outlook ahead, Mr. Pradip Kumar Das, the chairman and MD of the company, joins us on the show. Hi, Mr. Das. Good morning and good to see you in. Mr. Das, in the past you have been guiding for at least a 25% growth. As of now, your AUM, I think, is close to around 50,000 crores odd. So how long can you maintain this sort of a growth, if you could give us that? And by when will you need capital to raise some capital to fuel this sort of a 25% odd growth from here on?
Yeah, very good morning, and thank you for inviting me here. If you see our track record of 37 years, we are constantly and continuously growing. And if you see particularly the 3.5 years, we are growing more than around 30% CAGR kind of thing. So 25% growth, we are confident to maintain. And anyway, as I told earlier also, we do not focus on numbers. We focus on qualitative governance and timeline in committed delivery. So that is our core strength. Being the most specialized in the agency in this space, we are the most preferred lender as far as emerging and new technology is concerned. And if you see, we are growing continuously. And what I have been talking during our roadshow also, that we are continuously reducing our net NPA. So which was around 2 during IPO, and which is already come down to 1.52 in the last quarter. And we are confident of growth as well as reduction in NPA in the time to come.
All right, Mr. Das. Yeah, Mr. Das, that's kudos to you and the team as well for bringing the asset quality under control and even improving it even from there on. But when would you require to raise capital, sir? You know, you're going to be growing at 25% as you're saying. Will it be in the next 18 months? Will it be after 2 years that you'll have to come and raise some capital?
See, we'll be always looking for keeping a CRAR of around 15, 16, not certainly to 18. Okay. So in order to ensure that we are having triple stable rating continuity. So more important for us that we maintain the asset quality and we maintain the rating and we continue to borrow at the most competitive rate. And if you see, earlier our constraint was our net worth. Because of that, almost 3 years, it was stagnant kind of net worth around 2,300 to 2,400. So post infusion of equity via 1,500 crore and post IPO, we have already crossed around 8,500 crore. So we are confident that we'll be growing as well as and when it will be required. And maybe I can't tell you the timeline, but if in order to ensure that we are maintaining the LDCRA, we have to come to the market again for APO kind of thing. But before that, we'll be resort to alternate sources of cheaper financing. If you see historically, we used to enjoy a fair amount of forex resources in our total resource requirement. If you see 3 years back, our resource composition was more than 50%, 55% in the forex space, whereas the domestic used to be around 45, 47%. But today the scenario has been last 3 years, we have heavily borrowed in the domestic market because the landed cost was becoming cheaper in the domestic market. But since the new and emerging technology, we have to look for blended finance and alternate sources of green funds from overseas. To keep that in mind, to cater to the need of our Indian developer as well as the Indian developer setting up project abroad and those who are having project in India having export potential, to cater their requirement, we are opening shortly, maybe in April or May, our office in GIFT City. We have already got the NOC from RBI and the process is on. So that segment will be saving almost 3.5 to 4.5% of hedging cost. So hedging was becoming the main factor for making the landed cost of forex funding costlier. So that is one source. And again, in the retail segment also, we have started retail doing since more than a year. But if you see in the rooftop solar space, we have already financed in the C&I 567 crore sanction. And 315 crore we have already financed. And so also agricultural sector in Kusum, we have already sanctioned 178 crore and growth.
Mr. Das, we'll come to some of these individual sort of segments, but very exhaustive kind of summary you've given us. Good morning, Prashant this side, sir. Sir, could you tell us what is the exposure for you on the wind side? What is the outs? Yes,
around 30% of our total portfolio
is wind, right? Now, I just wanted to ask you, there are news reports which say that for the wind sector, the government has written to states to once again implement the reverse e-auction method. I mean, this was sort of done till 7-8 years back. There was a lot of irrational bidding, etc., which had taken place. The sector then went through a bit of a slump. And then, of course, it was junked. The method was junked, but it's back now. I just wanted to get a sense from you as an important financier to the sector. What do you make of it?
See, if you see solar, the bidding is going on and it is successful so far. You are right, in the past, the wind, it was not. But I think now the developer, policymaker and lenders all are at same pace. And all are working in a very transparent manner to see the real space for each other in the economy. So instead of looking into a greedy way, going ultra competitive and cutthroat competition, that sustainable competitive price should emerge. So that is the key now onwards.
So you don't think that, like it happened in the past, it will lead to irrational bidding in the sector?
I feel we believe that it will be rational bidding now. Irrational bidding will not be there because we have seen what is the outcome of irrational bidding in the past.
Okay. And is that also maybe so because there are fewer players? I mean, there's been consolidation. Some of the weaker marginal players are out of the system?
See, that happens in every industry. And ultimately, those who have fundamentally solid and sound principles and practices, see, ultimately, governance is the key. Why you will get into that unrealistic competitive price? That means you have governance issues. You do not have long-term planning. And we know that the renewable energy space is going to be there for at least 20, 30 years down the line because our future energy we have to meet from renewable new sources.
Got
and,
it.
Every unit, we need 90% from there only.
Yeah. Mr. Das, any reason why this has been brought back, sir, now, in your assessment, the reverse bidding method?
See, ultimately, we have to have competitive price and in a transparent manner. And second, we need to see a balancing. We need to have round-the-clock power because if we talk about the new and emerging space, where we have to depend fair amount of requirement, that is in a sense towards the green hydrogen and its derivative, we require continuous power. So we need to explore fully solar, wind and hydro along with pump storage so that we can have continuous power so that new and emerging green hydrogen and its derivatives, which is going to become a complete game changer because we have huge requirement. Yesterday, already our Viksit Bharat program announcement by government has already been announced. By 2047, how in a strategic manner we will become a developed economy. And for every development, we require energy. And for energy, we have to depend on new and non-fossil sources only.
Okay. Mr. Das, good morning. I just had a couple of questions. Earlier, you said that you're doing a road show. Can you tell us how much of fundraising are you looking at, say, over the next 1 year?
See, we want to fully leverage, as I said, our always target is to fully leverage. So we can go to 7 times of our equity. So road shows, we will be targeting to the overseas road shows, as I said, to look into the cheaper and blended sourcing of financing because domestic market in anyway 3.5 years we have been doing and it's a quite competitive. Globally also that, but post our listing, we are better known in international market as a pure play green finance house, which was not known to all in true sense and spirit. So we want to encash that. With that context, I had said that we have to go to the roadshow and explore the alternate and cheaper sources of funding because key is how best we can reduce our cost. Because lending market is also new and emerging. More and more cheaper finance we make them, enable them, the faster the sector will develop. And we being a responsible agency and sole arm of MNRE, which is focusing on new and renewable sources of energy,
so, Mr. Das,
we have to get in that mind.
Okay, so you're saying that your intention is to remain fully leveraged at 7% of equity, but do you have any number in mind on how much the fundraising that you're looking at?
If you ask honestly, 3.5 years, whoever is asking, we say that we don't believe in numbers. We believe in quality governance. The numbers is following us.
All
If
right,
you see, we are trying to always fully leverage.
Okay, got it. And just two more questions from my end. One is on the net interest margins. What is your expectation as we move along over the next 1 to 2 years? And also, you were talking about this loan growth, right? Is this something that is sustainable over the next 1 year or so? What is the average loan growth that we can expect?
If you say the NIM, it is slightly going down because of the obvious reasons. As I said, the new and emerging, if it is green hydrogen, pump storage, e-mobility, because e-mobility is quite fast emerging. So unless we have some lower cost funding to them, the sector cannot grow fast. And we are trying to build on the volume. Our book size was earlier only 22,000, 23,000 crore. We have crossed 54,000 crore. So now we have an asset mix kind of thing. That 60% to 70% of our assets are traditional RE. 30 to 40% assets are emerging RE, where we are having fair amount of good NIM, as well as our bottom line is up. But since our asset quality is much better, our provision coverage ratio is quite low vis-a-vis the other NBFC who are working in this space. Quite low if you compare. So when you have lesser provisioning requirement, our bottom line is automatically getting up. So not only one should look at the NIM, they also look at what kind of lower provisioning coverage we require.
Can you give us a number, sir? What NIMs can you do? I recall you telling us that your ROA will be headed towards 2.5%. So by when? NIMs, targeted ROE and ROA, sir. We'll wind up the interview after that. Just wanted these three numbers.
So if you see our last quarter, our NIM is 3.2.
Yes.
And spread is around 205.
Yes.
2.05. And we'll try to sustain that and further improve. See, recently post-listing, our net worth has gone up and we are known in the market. And already our borrowing in the domestic market, we are getting 5 paisa vis-a-vis the others, the lesser rate. So in the time to come, maybe another couple of quarters, probably we'll be reaching during that period, but difficult to commit on any number now. As because despite being in 37 years, we are not that much known in the market that we are the only green power play, green finance company.
So the endeavor is to hold your NIMs at around this 3% plus, and the ROAs will hit 2.5% in the coming fiscal. We've got that correct, right, sir?
Right.
It's a pleasure talking to you. Thanks so much, Mr. Das, for joining in and filling us in with all of those details.